Income Tax 2020. Itemized Deductions, Gifts to Charity. Come in, relax with Income Tax 2020. Itemized Deductions, Gifts to Charity. When looking at our income tax equation, we're going to be thinking about the below the line deductions and those below the line deductions of the itemized deductions, remembering that we could break our income tax equation down into basically two parts, the top half being a modified income statement, bottom half then being the calculation of the tax and application of both the payments and the credits to get then to the bottom line of the tax refund or amount due. We're going to be focusing in on the top half here, basically the modified income statement. We're looking at deductions. We have two kind of categories or sections of deductions, and then we could break them further down. The two categories being the above the line deductions or adjustments to income versus the below the line deductions, which would be the greater of the itemized deductions or the standard deductions. We here focusing in on the itemized deductions, which would only be applicable if they raised or went above the standard deduction limit. The standard deduction limit being dependent upon filing status, such as single, married filing, joint, and so on and so forth. On the Form 1040, we're focused down here on line 12. I know this is a small 1040 here because we put the whole thing on one page, but we want to see it all in context, and then we'll see it in detail zooming into it in the tax preparation software next time. So we'll zoom into the form in the following presentations. But we're looking at line 12, which says standard deduction or itemized deduction, meaning we're going to take the larger of the two. The standard deduction rates basically to the right or to the left of the form, so you can see them as a reference when actually looking at the form. So we're looking in on the Schedule A then. We're looking at the component of the Schedule A related to the gifts to charity. Gifts to charity. Now remember, there is like a $300 above the line deduction for people that do not itemize, but it's got a low cap and you have to have just basically cash gifts. So if you do not itemize, then you may still get some benefit from the gifts to charity in the above the line deductions. But then if you go on beyond that or if you are itemizing, then the gifts will typically be on the Schedule A and will be beneficial if you are indeed then itemizing. So we have line 11, gifts of cash or check. If you made any gift over $250 or more, you want to see the instructions for reporting on it. Other than by cash or check, if you made any gift of $250 or more, you could see instructions. You must attach the 8283. So that just by looking at the forms here, we could say, okay, cash gifts would be on line 1 to basically charitable type of organizations. And then we would be looking at other types of things such as gifting property possibly. And if doing that, then we might be able to have to or need to use form 8283. So general rules here, gifts are typically going to be going on the Schedule A. And of course, they would have to go then to basically qualified charities typically in order to be deductible on the Schedule A. That's the general rule. We're going to go into more detail now. Remember that although the 2020 Schedule A is out and we'll be practicing in on that in the following presentation, the Schedule A instructions for 2020 are not out yet. So we're basically taking the 2019 instructions and making adjustments where applicable to them. If you have questions about gifts and whatnot that you think are in kind of like a gray area for 2020, then you want to start your research, of course, in the instructions for the Schedule A for 2020. Once available, we may provide a link to them when they are available, but of course, you can find them on the IRS website at irs.gov, irs.gov. So gifts to charity. You can deduct contributions or gifts give to organizations that are religious, charitable, educational, scientific, or literary in purpose. These are basically the qualification factors for an organization to be basically a nonprofit or charitable organization according to the IRS, according to the government. You can also deduct what you give to organizations that work to prevent cruelty to children or animals. Certain whaling captains may be able to deduct expenses paid in 2020 for Native Alaskan subsistence bowhead whale hunting activities. Now, I'm not sure this applies to 2020. I'm assuming this kind of rolls forward. This is obviously kind of a specialized area within the code. So if you fall into that categorization, that's specialized for Native Alaskan subsistence bayhead whale hunting, then you might want to do some more research there and make sure that that is applicable. To verify an organization's charitable status, check with the organization to which you made the donation. So you want to make sure and I would check obviously before you make the donation typically, because not so much just so you can get the deduction, but that you want to give it to a qualified organization. And the fact that they are qualified for a charitable organization lends some credibility to the fact that the money is going somewhere legitimate. Doesn't mean you shouldn't give money obviously elsewhere. You might give it to an individual or something like that who isn't a qualified charity, but you don't get a tax break for that. And if you're going to some type of organization and you don't have a lot of information on them, the kind of baseline information you'd want to know is if they're claiming to be charitable in some nature, that they qualify for the charitable organization. That shouldn't be the determining factor, because then you want to think about the best, charitable organization, because they who uses their money most efficiently and whatnot. But that can be like the floor in choosing, where to put your money. The organization should be able to provide you with verification of its charitable status. Use our online search tool at irs.gov/TEOs to see if an organization is eligible to receive tax deductible contributions. So you can go to the IRS website and look up charities to see whether or not they're eligible for the charitable organization. So the following list gives some examples of qualified organizations. You could see publication 526 for more examples. So these are examples of organizations where typically if you give money to them, they will typically be a qualified charity and therefore possibly deductible on the taxes. So that would include churches, mosques, synagogues, temples, and other religious organizations, Boy Scouts, Boys and Girl Scout Clubs of America, CARE, C-A-R-E, Girl Scouts, Goodwill Industries, Red Cross, Salvation Army, United Way, fraternal orders if the gifts will be used for the purpose listed under gifts to charity earlier. So you want to be careful with the fraternal orders. Veterans and certain cultural groups, nonprofit hospitals and medical research organizations, most nonprofit educational organizations such as colleges, but only if your contribution isn't a substitute for tuition or other enrollment fees. So again, you want to be careful with the colleges, and if it's categorized obviously as a payment for tuition, then you can't really put it under charity if it's some kind of compensation for actual services, being the education. Federal, state, and local governments, if the gifts are solely for public purposes. Amounts you can deduct. Contributions can be in cash, property, or out-of-pocket expenses you paid to do volunteer work for the kinds of organizations described earlier. So obviously, if you pay cash, that would typically be deductible, but you might have, property that's going to be transferred as well. It's going to be a little bit more difficult to figure out what the deduction should be, because you have to find the value of the property, but that could typically be done as well. If you drove to and from the volunteer work, you can take the actual cost of gas and oil, or 14 cents per mile. So if there's driving involved, then you might be able to take the actual cost. Notice 14 cents per mile is like a mileage rate, similar to what you might have if you're using a mileage rate to be calculating the business auto expense or something like that for like a Schedule C. However, you got to make sure that you're looking at the rates. And again, this rate came from 2019, so the rate might be different. Tax software can then help to pick up that rate, but just note that the rate is often going to be less than, or at least different than, typically less than it would be for the rate for a Schedule C mileage rate if you had auto and car expense in that situation. So add parking and tolls to the amount you claim under either method, but don't deduct any amounts that were repaid to you. Gifts from which you benefit. If you made a gift and receive a benefit in return, such as food, entertainment, or merchandise, you can generally only deduct the amount that is more than the value of the benefit. So if you paid for something and they gave you something in return, and this is typical of oftentimes for charitable organizations, they might give you something of no value. If they give you a flower or something like that, and then possibly it has no value. But you might have situations where you go to a dinner or something, and the cost of the dinner then should not be included as part of the price of the gift to the charity. So you have to remove the value of the thing that was paid for, and whatever was paid for over and above the value of what you received from the charity, that would be the amount that possibly you can then deduct as a charitable deduction. But this rule doesn't apply to certain member benefits provided in return for an annual payment of $75 or less, or to certain items or benefits of token value. So you have a token value or a kind of a materiality type of threshold. For more details, you can see publication 526. Gifts of $250 or more. You can deduct a gift of $250 or more only if you have a statement from the charitable organization showing the information in 1 and 2 next. So if you under 250, you don't need as formal the information directly from the charitable organization. Over the 250, then you need the information from the charitable organization to verify. And obviously you would need that in the event of an audit. If you're doing tax preparation, then you're going to have to ask the client for their charitable donations, and they'll have to provide you with that. You're not going to typically have like a 1099 or a 1098 or some formal documentation. However, you might have some documentation from the charitable organizations that obviously the client would then provide you with, which would give you the information necessary to populate the information into the tax return. So 1, the amount of any money contributed and a distribution, but not value of any property donated. So obviously if you gave them money, it's pretty straightforward what you gave them, and you know the value of the money is the money. But if you give them property, they may provide you a something telling you what the property was that was given to them, or that they received something, but they may not be required to value the property, because obviously that would be more difficult to do and something that a charitable organization may not have the capacity to do. When you're talking about giving someone property, what's the value of that property? Whether the organization did or didn't give you any goods or services in return for your contribution. If you did receive any goods or services, a description and estimate of the value must be included. So if the charity gave you something, they should, within the documentation, tell you what that is and the value of it. So they should be able to give you the value of the thing they gave you in return. And you probably gave them some money or something in a value greater than that. So they should be able to provide that within the documentation. If you receive only intangible religious benefits, such as admission to a religious ceremony, the organization must state this, but it doesn't have to describe or value. Limit on amounts you can't deduct. Certain contributions to charitable organizations, to the extent you receive a state or local tax credit in return for your contribution. So you can see publication 526 for more details and exceptions. So if you get a credit for the contribution, then you're basically getting a benefit from the state. You might be getting basically the money back in some cases, and you can't take a deduction then on top of that after already having gotten the benefit from the state. An amount paid to or for the benefit of a college or university in exchange for the right to purchase tickets to an athletic event in the college or university's stadium. So that you can't basically have a deal where you're getting something in return and act like you're not getting something in return. That's not a gift. That's going to be a market transaction. So if you give a gift and they give you tickets to a game, then that looks a whole lot like a transaction rather than a gift. So travel expenses, including meals and lodging, while away from home performing donated services, unless there was no significant element of personal pleasure, recreation, or vacation in the travel. Political contributions. So again, we're trying to differentiate political contributions for the most part from charitable contributions, because when people give to political contributions, then they often do so, you know, they might be trying to get political favor and whatnot, and we don't want to basically have a deduction or incentive for the political contributions, because again, it's not something that should be about personal gain. It should be about giving to charity. That's what the incentive should be. So no political contributions for general. So dues, fees, or bills paid to country clubs, lodges, fraternal orders, or similar groups. So again, that were paid to these country clubs and lodges and whatnot, or you would think could be for, again, personal benefits for use of those things, or to be part of those things, rather than basically a charitable gift. And again, the idea is that it should be a charitable gift. So amounts you can't deduct, continued. Cost of raffle, bingo, or lottery tickets. So these types of things, types of gambling, typically will not be included as charitable contributions, even if paid to something like the state, for example, with the lottery. However, you might be able to get a deduction for them for gambling losses. And remember, that's going to be limited to the extent of gains and whatnot. We talked about the gains in a prior presentation. We might talk about that deductibility in a future presentation as well, but not here in the charitable contributions. Value of your time and services. So if you're giving time and services to a charity, for example, typically if it's not going to be specialized time, like if you're doing legal work or something like that, then possibly you might be able to have some kind of charitable contribution. But if you're just like serving meals or something like that, then typically you can't include the time as basically charitable deduction. Value of blood given to a blood bank. So if you're giving your blood, then you don't get any deduction for the blood you gave. The transfer of future interest in tangible personal property. Generally, no deduction is allowed until the entire interest has been transferred. Gifts to individuals and groups that are operated for personal profit. So if you just give money to somebody that's not an organization, that might be a good thing to do. That might be a good thing to do in circumstances, but they're not going to be deductible for charitable deductions because they're not a charitable organization and the IRS has no way of verifying anything under those circumstances. Gifts to foreign organizations. However, you may be able to deduct gifts to certain U.S. organizations that transfer funds to foreign charities and certain Canadian, Israeli, and Mexican charities. You could see publication 526 for details there. So you can't really give gifts to foreign organizations, but if there's something going on in a foreign country that you want to give money to, you might have a qualified charity in the U.S. or possibly related countries that you could give money to that could do work, in the foreign countries. So amounts you can't deduct continued. Gifts to organizations engaged in certain political activities that are in direct financial interest to your trade or business. So again, the political gifts, if it looks like there's going to be any kind of benefit to you on it, they're going to try to say no political benefit gifts in general. Gifts to groups whose purpose is to lobby for changes in the law. So if you're giving money so that they can lobby for changes in the law, most of the time when people do that, they have a vested interest in what the lobbying is, and that defeats the purpose of a gift, which is supposed to be, not have any kind of return on it typically. So they want to not encourage that or not give a deduction related to it. Gifts to civic leagues, social and sports clubs, labor unions, and chambers of commerce. Value of benefits received in connection with a contributions to charitable organizations, and cost of tuition. However, you may be able to take an education credit. So the cost of tuition, can't include that as a charitable deduction, but you might have other benefits related to that, such as credits and possibly a deduction. So we'll talk about that in future presentations. Carryover from prior years. You may have contributions that you couldn't deduct in earlier year because they exceeded the limits on the amount you could deduct. So in this case, we saw earlier that we had a situation where you could say, well, there could be limits or caps. It would have been deductible, but there was an AGI limitation. Well, do I just lose the deduction altogether, or can I carry it forward? It might be the case that you could carry it forward. Now, if you carry it forward, it would be nice to have the tax software to help you with the carry forwards, because if you pro forma the tax software, it'll help you to see the carry forwards of things like the charitable contributions and whatnot. So in most cases, you have 5 years to use contributions that were limited in an earlier year. The same limit applies to this year to your carryover amounts as applied to those amounts in the earlier year. After applying those limits into the amount of your carryover that you are allowed to deduct in this year, you could see publication 526 for details. So if you get cut off because you donated more and you have an AGI limitation, you don't get it in the current year, you might be able to then take it in a following year, have it carry forward.